Well, good weekend, all. Ira Epstein, and here we are with the weekend edition of your financial market wrap-up. And this wrap-up is for Sunday, the 14th of September, 2025, about 6:20 p.m. Central Time. Hope you're liking the football. Interesting day, that's to say the least. First time Mahomes lost 2 games in a row. So that's fascinating as can be from what I understand. And for the season, they're not looking good. Eagles went right over them again today. All right, but in the markets, what's going right over things are the stock markets continue to rally. This is the week where we get from the FOMC both the cut, and I feel confident in saying you're going to get a cut. The question is it 25 or 50 basis points? Considering the Fed is generally pretty easy with things, and considering that CPI numbers were not as favorable as they could have been, why not the 25 basis points? They can go again right after that. And you get 3 of them in by the end of the year if the data shows that it's needed. But I believe the Fed is going to go with that number. You can see in the energy markets very stable tonight, really not going one way or the other very much at all. And I think we're all waiting to see what President Trump and Europe come up with on sanctions for Russia. Trump is playing it beautifully, not doing an awful lot one way or the other, saying to Europe, hey, you're still buying their oil. What do you guys want to do? Bonds and notes, you're adding some yield back in front of the Fed move. In the gold market tonight, you can see you're down $10, silver down, copper, all of them are down. But remember, they've been rallying like son of a guns to the upside. Now, in terms of data for tomorrow, you're going to get the New York Empire State Manufacturing Survey, and that's going to come out at 7:30. The August reading was a positive 11.9, but they're looking for only half of that as we start out. And for you grain traders, you're going to get the crush spread, and we'll see just where the crush all comes in. So let's go back to the charts and see just what we've got, because this is a week that any way you want to cut it, it's all about Wednesday. It's not only what the Fed does, it's going to be dot plots. It's going to be the wording that the Fed chair gives us on Wednesday. So as we look at the S&P, up, and away. That's basically all you can say about the market. You can see that when you look at a weekly area chart of closes, it's the same thing. When we look at the bar chart, you're up at a new high for the market, knocking on the door. The pattern has been one of higher lows and higher highs, still bullish in the marketplace. When we look at the Bollinger Bands, the next objective just might be this number at 67.51 roughly. Wherever the Bollinger Band is often a zone the market on a surge tries to stop at. We'll see if that happens. You've seen this happen over and over before. It's still there. When we look at momentum, it's to the upside and embedded. So as far as I'm concerned, the market is still one that the pros are buying the breaks. They're looking for where the market peaks out, and when it peaks, it peaks. No way to know. I'm aware, and you should be aware, that the last 2 weeks of September are historically bad weeks for the stock market. Often it's the worst weeks of the year. So we'll see if that comes into play. So far, I heard that for August, and I paid attention to it, my trading career. Didn't work then. It's not working now so far. When we look at the Dow, my eye latches onto the embedded reading. Market's still coming up. Resistance number could be the upper Bollinger Band. So until you lose these bullish embedded readings on a weekly basis, I'm just in the bull camp, looking for the Bollinger Band tops until and unless the red line closes under 79. In the Russell, I have this on the chart because you have not gone up for an all-time high in the Russell versus where we're at in the futures contracts. You can. No magic to it. It's 77 points away. We'll see if it can keep going. Then we come to the DAX, which is retreated to the 18-day average of closes, basically in a market that's trying to break down. Momentum breaking down. You've got the swing lines with lower highs, lower lows. If it does break down, I'm really not looking for much more than the lower Bollinger Band at 42.77 to contain it. In the 30-year bonds, we've tried the upside. Now you're fighting, coming into the market at the 18-week average of closes in green and the upper Bollinger Band. That's your first major zone of problem. Keep in the back of your mind, a lot of traders that were long, so let's say the 2 years, short the 10, they're taking some of that off in this market. They're saying the market might be to the point where it's done its job. In the 10-year notes, you're right up to the resistance point as well of the 200-week average and the upper Bollinger Band. In the dollar index, I still have the market in a minor downtrend. The question is, can it make new lows? If it does, I'm looking for 96.24 to be the lower Bollinger Band support, and that means in the euro, if you can clear all this mess you have, maybe you can get up to the upper Bollinger Band. In the Canadian dollar, a higher high and a lower low, no real setups here to work from. And in the Japanese yen, you went back up last week, hit that 18-day average, and you sort of ran out of steam as you did that. Came back and settled about unchanged on the week. In Bitcoin, I think the market tried the bottom on the daily charts near 108,000. On the weekly right here, I see the next resistance in the chart at 122,000 in this. When I look at the differential between the Brent and the WTI crude, it's favoring Brent holding more than the WTI, which is interesting. Lower highs, lower lows, still in a downtrend, but oversold in the Brent. WTI in a downtrend. And remember, we're now switching gears, looking at gasoline as much as we normally do. Let's get into the heating oil, which is in an uptrend, riding the 18-day average of closes. If we can get any steam going, why not the 100-day average if it can? The number you don't want to see taken out, though, is 224.64. If that's taken out, you hurt the bullish attempt at this point in time, and you probably go nowhere for a while, so I'd be very, very cautious with that. So that's pretty much what I'm seeing. Remember, this is the week you want to read my letters, that of Linn, get an idea what we're going to be looking for as we get into the Fed meeting. Move your cursor to the top here. You'll see an icon. Give it a click, it'll take you there, or simply go to iraepstein.com. Doesn't get any easier. I'm Ira. You have yourself a great day. You take care now. I'll catch up with you in the other updates tonight, and of course, Monday morning in our morning flash update.